Hi, Big H Trades here. I'd like to talk to you today about the title in it's a little bit to get you to look, right? To see if you like my ideas. If you don't, that's fine. If you're extremely successful chart trading guy, you probably don't need to listen to me because frankly, my main trading really is in much larger time frames. I do some short-term trading, but really frankly not that much. And I just don't really have that mindset. My most profitable trades have been big positions taken when the crowd is extremely on the opposite side of that trade. And you have to wait sometimes a long time for that. I held silver for 5 years or so until it became extremely profitable. But when it did, I cashed in. But I do want to show you some ideas today about charts. I do financial consulting. Usually when people are kind of in dire straits and struggling, have made some bad decisions, and then they find out about me, and I do some counseling with them and try to see if there's a way that they can save themselves without bankruptcy. One other thing I'd like to talk about in trading is methodology. You know, there's a lot of different ways you can be profitable in trading charts. The way that I use generally charts is more in the background to support the idea of the timing of what I'm doing it. Not so much, I'm not a Robert Prechter, obviously. I think I'm not putting him down. I think he's a really smart guy. I think he's got a mind that sees charts in a special way, and he's incredible. And I think there are some people like that. I'm frankly not one of them, but I do, Elliott Wave is one of the things I look at. But I shy away from too much exterior information. You know, like the studies, for example, the platform that I will be using when I show you, charts and stuff, just because I kind of like their charting stuff better than my actual trading one that I use for my own money, is Thinkorswim, and you can go on the studies section of that and you can find all sorts of studies. And I'm not saying, again, there are some guys that really use those profitably, but frankly for me they're a distraction because I just can't incorporate them. You can load study on top of study, but I'm not just sure there's that many people that use them successfully. I think it can become a distraction, and I'll talk about that later in another video about distractions to taking positions, and that's partly dealing with overload of information. You can analyze and analyze and analyze, and in the end not do anything or do the wrong thing. But you're essentially, in what I found for myself, I essentially have an opinion what's going to happen in the big picture because I'm a macro guy more than anything, and then I looked for stuff to kind of support that position, and that's a real flaw and a bias that's just coming out. So frankly, I lay most of that stuff aside. I look for a chance to take a big term position like I did in the early 2000s with silver, and then look for a point where I'm going to be lightening that position, along the way as it goes up. And I finally sold out my last silver at 42 bucks an ounce, and I had people then. I remember going in to sell the actual physical silver, the last of it, that I had a couple thousand ounces. The last of that, when I went in to sell it, I remember the place where I took it, he was pumping his idea about how by the end of the year it was going to be well over $50 on its way to $100. And I remember chuckling to myself, thinking, that just supports my idea even more. When you have so much of these ideas, it's going to the moon. You probably better look out. It might be a place where it's actually ending. One problem when you get old and you allow your dog to get away with anything, and he's old like me, but he kind of controls the schedule around here. So anyway, back to that. So methodology. And so what I like to think in terms of is time frames, and specifically like a short term, a medium term, and a long term. And that might be different for like a day trader. So for example, my short term is maybe something like 10 days. My medium term might be a few months, 3, 4, 5 months. And my long term is the big picture, where I'm going to take the big position to hopefully make a lot of money. And if I'm wrong, I'm not going to lose a lot of money. Let me say that again. You want your risk to reward is what it comes down to that I know that can be tough to perceive, but for example, when silver was $5, well, could it reasonably go down to 4? Well, it did, yeah. Could it go to 3? Well, it could have. Could it went to 2? I suppose. Could it went to $1? Hard to fathom that. So my downside was a few bucks an ounce. But my upside, which I really didn't think it was going to go to 50 in this cycle, I thought probably mid 30s or something is where I started to tell people who consulted me. I thought they should, if they bought it cheap, they should probably start lightening their positions. In fact, my daughter called me. I said in another video, I believe that, one day when it was about $35 and somebody wanted to buy, she had a few hundred ounces of silver. And what I thought it was a great idea. And when it kept going up, for a while, she's, wow, maybe I should have kept that. I said, well, we'll see in a few months. Well, now if she wanted to, she could have had an opportunity to buy it at what, $13? I still wouldn't advise somebody to take a big position there. If you wanted to start dabbling in it, I think you could make a case for it. But I'm still, frankly, not that interested in it, except if it fits in a short-term position. So now I'm going to, I need to rig up a little bit better thing. Here my older brother, he's even older than me, he's 70, and he's so techie that it's incredible. And I feel like I'm 60, and I feel like a complete idiot on a computer because I just can't do that much high-tech stuff. And my wife always says, it's really because you probably don't want to learn it. There's a lot of truth in that. Something you really want to learn bad, you probably have the ability, the average brain to do it. And so I guess there's some truth in that. But let me swap this around, and now I want to do a little charting with you. Jimmy, just give me a second here. I'm sorry. Okay, hopefully I'll be able to link these two videos together. This is a gold chart, and we're on about a 5 or 6 days. So if this is Thursday, Wednesday, Tuesday, Monday, and with Sunday, you got some nighttime trading that starts at 3 my time, 3:30, and back. So just a little bit over a week here. And if I was to look at that chart and you forced me to make a trade, well, what I would probably tend to do is I would trade a range, and so right there I would not be willing to take a trade. But let's say it fell down to, I'm hoping you can see that cursor well enough. So I'm gonna, so if it fell, oops, I'm sorry, I'm on the, did I say I was on the silver? If I did, I apologize. I'm on the gold chart. If it fell to where this band is here, I might look at taking a little bit of a long position. I'm certainly not going to get that much. Again, we're talking about a short-term idea. And the reason is because the last couple months, so now let me go to about let's go to a month time frame. Here's 30 days, and let's go to, we'll go to an hour chart. So every bar will represent an hour. Now, as you can see, it really fell, didn't it? But so I'm going a little bit too far back. All I'm trying to tell you is, okay, I'll go to that point in a minute. So this is going back to about 2.5 weeks ago. And generally, if you did a trend line, well, you're having some higher highs and some higher lows. But again, I certainly wouldn't take a big position on that. It would have to come back into a range and to test the high again. So as it comes somewhere down in the 1265, 1266, if I wanted to, I'm not saying I would take this trade because I wouldn't. But if I wanted to sit around and watch charts, I would consider, in other words, I would go long more than I would go short right now. That's my point. Now on a medium frame time, so let's go out now a couple of months. I'm going to go to 3 months, and we'll be on the daily chart. So every bar is going to represent a day. Now, if you look at here, right, you see it's a real down. All of these were lower lows and lower highs. So you could also make a case, if you're on a, say, a monthly type of a chart, that if it comes back into this zone, 1278, 1280, you're more interested in shorting that. But again, not a big position, because there's nothing really compelling there, in my opinion, to do that on a few week trade. And now let's go to the big picture. So I'm going to go to several years. Let's go to I'm going to go actually to the 10-year, because I wanted you to see the big picture. So this is still going to be a daily chart. So every one of those ticks represents a day. You can see the high 1923. Here you could look at this. This would be relatively the same on silver, and this is where I got out of my last silver. And there were a few technical reasons why, some chart reasons kind of supported my idea, but there's really more fundamental ideas why I did, and I was selling it all along this way up. So what would I want to take on a big picture? In other words, if I'm willing to take a couple year time frame trade, well, I would still be short, but I'm not any longer. Not because I don't like the risk to reward, and that's what it boils down to me. That's why I'm showing you these charts for a minute. You know, you have a short term, which gold is basically up. You have a medium term. So now let's look at this just for a minute. If we go back even to the beginning of 2014, you know, you become much more choppy now. You don't have big down movements. I mean, you did have several $100 down, but you've also come back several $100. So to take a big position there, I don't like it. And frankly, the big money, the making $1 million in a trade is extremely difficult. But it's much easier when you think about this. You're doing the big position that really very few people thinks is going to be a smart position. The more people that you have roll your eyes and think you're out of your mind to do it, it's probably a thing to be considering. And of course, then I generally like to go long stuff. So I want to wait till just about everybody is disgusted with something. And I remember reading an article in either Wall Street Journal or Barron's, and the headline was "The Death of Gold." And then what do you see at some of these tops? What kind of things do you see happening? You see, you know, gold is going to $5,000. So-and-so predicts gold to $10,000. So-and-so predicts the end of the dollar. You find machines in airports selling 10-ounce rounds of gold. So who are you going to keep selling to? You've pumped the idea so hard. You've got so much price appreciation. I mean, so look, you've come from $300 or so to almost $2,000 to $1,923. That's a heck of a rise. Now, if I was going to make a real case for inflation, maybe I might believe the continuing rise of it. But part of my point is, where are you taking your risk buying at? And if you're buying as this market is really zooming, you're taking on greater and greater risk. Not even drawdowns, but risk, because it's moved so much. We can talk about that on another video, that I'd like to incorporate that into other charts as we talk about that more. But let me just close on this one that says this one more time. In the way that I trade, to make a lot of money with relatively fantastic, I'm going to call it the reverse, reward to risk ratio, is take that position that there isn't much left to squeeze out of it. You know, if oil chart, I remember telling somebody that was in the industry, and we got into almost an argument. I really don't like to argue with people. You know, you can have your position, but this is where I did incorporate a little bit of Elliott wave, but only to affirm my idea. When gold had gone, or I'm sorry, when oil had made a huge crash a few years ago, and then it built back up to $100, and they were assured it was going to go to $200, and I was assured it was not going to. And I said, in fact, I believe you're going to see at some point. This is when gold was trading anywhere from about 95 to 105, 110 bucks, and I said, my money is on it's going to actually go below $33 before it sees a new high. Well, look what it did after that. In fact, I think it went to $27. And so now if we look, we'll maybe in another video pull up the oil charts and trading that on either a short-term, medium-term, or long-term basis. I am still not bullish oil, not at all. But that doesn't mean I would go short at this price either. But for the I'll repeat it again, and we will do more chart work and looking ideas. If you have a conviction about where you think the market is going, yes, use charts to help enforce your conviction. But be careful. I've always tried to live this in my investing, and also as people come to me for advice, that I would rather lose money in a trade rather than making money and be wrong. Because luck isn't going to get you anywhere long term. You might make some good money a couple times on taking something, but you did it for the wrong reason. But if you don't have the right methodology or at least with it, the right overriding idea, you keep being, in other words, you made money but for the wrong reason, eventually that's going to start catching up with you. I want to make money and then go back and look at that and say, I even made it for the right rational reason. In other words, that trade made sense because of this and this, and as it's played out, that has just enforced my idea even more. I want to be right for the right reason. I don't want to make money and be wrong. It's going to catch up with you. Thanks. I would appreciate it if you enjoy this video, if you'd give me a thumbs up. If you don't, give me a thumbs down. But what would be helpful too, especially if you don't like it, to kind of tell me specifically why you don't. If it's boring, that's fine. I don't know. Or if you like the idea of it, but you would like to change it up a little bit. In other words, do you want to see more chart work? Would you like to see less chart work? Would you like to talk about more other investment ideas? But I'll be doing these over the next few months. And there was kind of a reason I had to get out of this a few years ago when I was doing this. I had a real bad sickness in the family that I had to attend to for almost 3 years, and it's resolving itself, thank God. But so anyway, I've had a lot of people still during that time come and see me and want me to look at charts, and I thought, some of these, hopefully I can just direct them to this, and you'll get my methodology for trading. So in closing, I'll say this. I am not a real short-term trader. It took me 3 years to quit losing money short-term trading, and then over the next years to make money. But frankly, really, my truly big, great trades, I mean, I shouldn't say necessarily big, but taking a position which in relation to what I made didn't cost me that much, those are long-term things. And right now, it's a time, in my opinion, to be building a cash position so you can get ready to take advantage of when there is a great position out there. Short-term, medium trading is something else, and we'll talk about that and show you some ideas. But I'm frankly a macro guy, and I appreciate you watching.